Did you hear that lenders are exploring a 50-year mortgage? It sounds great for maybe lowering your monthly payments, but what's this really going to cost? Hi, I'm Laura Boswell, your North Atlanta Realtor. Let's run some quick numbers for a 20-year loan, a 30-year loan, and a 50-year loan based on a $500,000 home with a 6.5% interest rate on all three. Here's your principal and interest ratio for a 20-year loan. Here's your principal and interest ratio for a 30-year loan. And here's your principal and interest ratio for a 50-year loan. Now, in reality, interest rates already vary between 15, 20, and 30-year loans, so a 50-year term would likely come with a higher rate than a 30-year term to offset the lender's risk. A 50-year mortgage rate, almost double the time of that 30-year loan, might come with a substantial interest rate to compensate for the time duration that the lender is exposed. Couple of quick points for you. In reality, time already affects the interest rate that you receive. You're going to get a different rate for a 15, 20, and 30-year loan. And you can check that if you're unfamiliar with that. Just Google today's national average mortgage rates. Compare your 15-year fixed rate, your 20, and your 30. As of today, November 10th, according to bankrate.com, the national average for a 15-year fixed mortgage rate is around 5.61%. A 20-year is around 6.02%, and a 30-year is around 6.26%. So it's easy to see the effect that time has on the interest rate that you receive. Individual financial positions vary greatly and will have a large impact on these numbers. A 50-year mortgage with almost double the time duration of the 30-year might come with a substantial interest rate to compensate for that lender risk. Is that even going to make it worth it? We have no idea because we're just talking in theory right now. One of the things that you're going to want to consider is how long are you going to be in your loan? Is a 50-year product even appropriate for you? Most people in the greater Atlanta area sell their homes in about 8 to 12 years. Nobody pays off their mortgage when they're moving that quickly. You could use that 50-year product to get a bigger house with a lower monthly payment. But you're going to have so much more interest payment every month, and you're going to have such little equity growth that you're going to have much less money coming out of that home when you sell. There are still meaningful benefits that come with homeownership no matter which loan product you choose. Mortgage interest and property tax deductions can reduce your taxable income each year. I'm not a CPA. Consult your CPA. Everybody's financial positions are different. And it could help reduce your carrying costs, especially in those early years when the majority of the mortgage payment goes straight to interest and very little goes to equity. So the 50-year mortgage might make homeownership seem more affordable in the short term. And if they do bring this down the pipeline, it is on you, the buyer, to make sure that this fits your long-term goals, that you understand what you're getting into, that you understand how much money is going into it, and you understand how much money you might get out of it being your house when it's time to sell. If you do determine that this fits your goal and this is the right product for you, make sure you keep an eye out for refinancing opportunities that could improve your equity position down the road. Don't forget that adding even just a little bit extra to your mortgage payment every month can make a huge difference in how fast you pay off your mortgage and how fast you build up that equity.